Okay, right. Yeah.
Okay. Good afternoon, everyone. Thanks for joining this very important session on costing and pricing in the electricity sector. Let me introduce myself first. I am Tiril Roach. I work for Lanka Tiles PLC as the finance director. And I am a member of CMA Sri Lanka, and I am a member of the Cost and Management Accounting Standards Boards of CMA Sri Lanka. So the CMA-SB was founded and implemented in Sri Lanka to bring in cost and management accounting standards, which we don't have now. So as a part of that, we have now developed the framework, the conceptual framework on how to build standards. And an important part of that is doing societal costing. That means costing of goods and services which are used by the public and the cost for public of those items. So as a part of that, we are looking at the costing and pricing of electricity. But in addition to that, it's a very important and hot topic these days. A lot of people are talking about this, as you all know. And that's what I thought this CMA has taken a very important step of having this program today. We have had several programs before this, but I think today we have a very strong panel to discuss, and very strong and experienced panel to discuss this subject. So before that, there are some house rules, as you all know. I hope all are muted. And if you have any questions, you have to put it via the Q&A section here in your screen. And if you have any other non-question items that you want us to get noticed, you can put it on the chat box. So that I want to tell you that. And our agenda today will be first Professor Vatavela will do the welcome and introductory remarks, followed by Mr. Lakshita Veerasinghe, who will talk on costing in the power generation sector. Then followed up by Dr. Narendra De Silva, who will do the costing and pricing in the power distribution sector. Following him will be Mr. Tamita Kumarsinghe, but I don't think he's here today. He will be replaced by Mr. Kanchana Sirivardhana, who will talk about proposed revision in electricity tariffs, the regulator's role. And last, we'll have Mr. Raj Gopal and Mohan from India, who will be sharing their experience in costing in the power generation sector. So first of all, I will introduce Professor Vatavela and ask him to take over the proceedings. As you all know, Professor Lakshman Vatavela is the founder, president of CMA Sri Lanka, very important and very well-known personality in the Sri Lankan accounting field. He has been the president of CA Sri Lanka, AAT, CMA, CPA, and he was the president of the BOI, or before the BOI, the Greater Colombo Economic Commission. So it's a very well-known person. He has taken a lot of effort to bring this management accounting standards. In addition to that, the management accounting sphere in a wide role in Sri Lanka, and is lobbying very heavily in the political sector also to get these things into the government sector. So he was awarded the Sri Lanka Sikamani Award in 2019 because of that. So that's the recognition that he has. And he's a professor of Deakin University also. So I first invite Professor Lakshman Vatavela to start out the proceedings, welcoming everybody and giving the introductory remarks. Thank you.
Good afternoon, and thank you very much, Mr. Tiril Roach. I must thank Mr. Tiril Roach for moderating this session and also introducing everyone, which I think he will also do in detail later. He's also a member of our, as he said, he's of course a fellow member of our institute, and also a member, one of the key members of the Cost and Management Accounting Standards Board, and involved in the technical area. And as in his other capacity, he's the finance director at the Lanka Tiles, which is another major manufacturing company. So thank you very much, Tiril, for the opening remarks. I'm indeed happy that the CMA Sri Lanka, that's the Institute of Certified Management Accountants of Sri Lanka, I think a lot of you will know about us. Of course, just to maybe say a few words, we are an a body incorporated by an act of parliament. So now in our 22nd year, and our main role is to be involved in the cost and management accounting area, because we have had the financial accounting body that was in 1959, but maybe we were incorporated maybe 50 years later. And hence the cost and management accounting area is really not very well established in Sri Lanka. So we have a very major role to play, and as a result, one of the first things that we have done is the setting up of the Cost and Management Accounting Standards Board, because the purpose of that will be to set up the cost and management accounting standards for the different industries. So, of course, electricity industry is one area, but there we have to also work with the regulator. We have to work with the generation companies, the Ceylon Electricity Board and the others, and also many other manufacturing areas that we need to look at. So that while going into that one, I must also tell you that as professional accountants, we are members of the International Federation of Accountants, and one of the main roles is to serve the society. Now, the International Federation of Accountants is a major global body which over 3 million professional accountants with over 180 member organizations spread over 135 countries. So that's our international, but we also connected with the South Asian, where we have the South Asian Federation of Accountants, and I'm indeed happy that Mr. Rajagopalan Mohan, who is a member of the Institute of Cost Accountants of India, is present, because they have a very well-defined system of the cost accounting standards, and also where they work with the regulators and the standards for the electricity industry. And of course, in addition to that, they have what is called a cost audit, which enables to check and see exactly whether these cost team principles are being applied. So if you look at the electricity industry, it's one of the very important industries. Now, today, you know that we have a lot of problems with the power cuts that are there, and maybe which has resulted from the fuel issue. Today, the increase in prices have been asked because of the fuel increases, and also the depreciation in the currency, because most of these items have to be imported. But I remember in 1984, when I was chairman of the People's Bank, the most profitable institution in this country was the Ceylon Electricity Board. They had the largest number of deposits, and I must say that they were all deposited at the People's Bank, and they were very viable, because at that time the raw material they used was the hydro or the water. So there was no cost to it. But then when the power consumption increased, they had to go to other means, and thereafter where the thermal came in, and maybe with that they found that the cost of production was going up, and also whether the real sort of costing has been done is something that we need to look at. So because in our cost accounting profession, management accounting profession is to ensure that the costing is being done properly, and costing means that you bring in the efficiency, you bring in the productivity, you reduce the wastage. Because in the electricity sector, you have the generation, then you have the transmission, then you have the distribution. Of course, in the case of the Ceylon Electricity Board, all these are together, but I'm sure Mr. Mohan will say that maybe in India, where it is distributed maybe over different companies, and also the private sector involvement in all these organizations. So it's very important that we need to look at the cost, not only to determine the cost, but to determine the efficiency, the productivity, and of course the wastage, and even the raw materials that are being consumed, to ensure that they are the right quality, the right standard, so that the electricity generation will be at its highest efficiency and have a highest peak. So now these are some of the important things, but I'm sure today we have a very good panel. I must thank all of them for accepting, because we have the major player in the electricity industry, the Ceylon Electricity Board, and I must thank General Manager, and also the today we have with us the DGM of the transmission and generation, because we are then, because as accountants, a lot of them are not aware as to how this process works. What is the system that is there? How is the electricity generated? What are the costs that are involved in it? And how, and now what we are trying to do is how we can contribute to it, because if you can see, it's our main purpose is to see that there is value creation to the society, the value creation, so that what we have put out now is the managerial and societal costing framework, and we want to ensure that inefficiencies, wastages, corruption will not be borne by the society. So that is one of the major aims that should also be enforced by the regulator. So the regulator is also here today. Then we also have the Lanka Electricity Company. Now they are a profitable organization where they are involved in the distribution. So now we have to see as to how this whole thing has come. Then there is also the subsidy. Now with this tariff revision that is going to take place, there is a subsidy element that is coming in. How this subsidy is worked out and whether this subsidy will cover the cost, because one would say that CEB, now there are 3 organizations with the many have which even I think yesterday I heard where they were saying are the most loss-making state institutions in this country. One of course is the Ceylon Electricity Board, other one is the Ceylon Petroleum Corporation, other one is of course Sri Lankan Airlines. But then if you really look at the electricity industry and even maybe in the Ceylon Petroleum Corporation, pricing is a very important determinant. So there the costing comes in, plus also if the government decides on the pricing and if the cost is higher than the price that is determined by the regulator and the government, then that amount has to be given as a subsidy. So whether that has been calculated properly or whether it has been done properly, which the government need to give, because some of those subsidies which have been met by these state corporations are also shown as losses. So that's why we need to ensure that the proper costing system is there, the proper financial system is there, proper financial discipline is maintained in order that these organizations will be able to efficiently work and then show the good results to the society. So these are some of the introductory remarks that I thought that I will make, but I must thank everyone for coming and explaining this, because even the power sector is a specialized sector and the costing is very important if we are really to make, because today in today's circumstances cost has been very important. Today what we see, the price today, costing and pricing is very important, because the price today is not what we see tomorrow, because the exchange rate is varying, the other costs are increasing, so then the fuel prices are going up. So there are a lot of things that have come in, but we need to see how in this crisis situation, how we will be able to pull out Sri Lanka from this situation. So professionals have a major role to play, and professionals, the professional methods have to be, the professional systems have to be carried out. Otherwise, we will not be able to come out of this. We will be borrowing, but we have to find out how we can repay these monies that we are borrowing. That's otherwise we will really no one will be prepared to give us any money. So one of the biggest problems we have in this country is the high borrowings that we have done, which we are unable to pay, and we have now become bankrupt. But let us see how we can put things right and where the professionals can show the correct way as to how this could be done. But in this exercise, the costing area, the financial area, and of course with the importance of the engineering and the work study and other methods that come in, we will be able to ensure that these organizations are able to make a major contribution to the economic upliftment of Sri Lanka. So thank you, and I hand you over to our moderator, Tira.
Thank you, Professor Batavala. Thank you very much for that good introduction. Now I invite Mr. Lakshita Veerasinghe to deliver his speech on costing in the power generation sector. Mr. Lakshita Veerasinghe, of course, is an electrical engineer, and he has over 26 years experience in CEB in various capacities, but presently is working as DGM transmission and generation expert in the field of transmission and generation. So what do you, Lakshita, to deliver your speech?
Thank you, Tara. Let me get my screen. I hope you have shared, allowed me to share.
Yeah, just 1 minute.
Please.
Okay, fine, thank you. Actually, I must say that Mr. Lakshita Veerasinghe is on his way from Trinco, but he has kindly consented and is making the presentation by stopping on the way and doing it. So thank you very much, Lakshita, for your valuable time that you are going to spend with us.
Yeah, you're welcome, Professor. I hope you can see my screen.
Yeah, we can see.
We can see.
Right. So before, what I do is before I straight away go to the explanation and put you the numbers, I will first initially try to give you an understanding, a basic understanding that is required about certain essential fundamentals that you require to analyze and understand the numbers behind the electricity generation. Because numbers in the modern days, the information content is of not that much of value, because it's a matter of typing something on the Google bar, you will get enough content. But there is an essential knowledge component that you must have with you in order to give value to all these content and the numbers. We see that often people don't understand the real message given by these numbers, and as a result, they get lost. And not only that, in the worst thing is they try to take very important decisions, often misguided by the numbers. So I will very quickly try to manage this very little time given to me by starting with little fundamentals. First thing, very basic, what is energy, what is power, and in relation to the today's topic, what is that got to do with the fixed cost and the variable cost? This is very important to start. In very simple terms, what is power and what is energy? If you see that there is a person who needs certain amount of water to relieve his thirst, if the volume of water that he requires to relieve his thirst, overcome his thirst, is this what is shown in this inside his stomach. If we measure that in liters, it's a volume. If you measure that in liters, that is equal to energy, right? That is equal to energy. That volume of water is equal to energy. Then what is power? Power is the rate at which he is given this energy. He is delivered this energy is called power, or liters per second that is coming out of the tap is equal to power, and which is often measured in megawatts. The energy is often we measure it in units. We call it the kilowatt hours, and this is in megawatts in simple. So what is the importance of power? Hey, why not? Isn't the liters of water is enough? The energy itself is enough. What is the importance of power? What if I give you power like this? I will give you the total energy requirement that you want to relieve your thirst, but in a couple of seconds, what will happen? So this is why for a power engineer, even equally as important as energy is power. So you have to understand the difference between the two, the role played by the two before you go to the costing. A further step away, let's say this person requires a certain amount of energy to relieve his thirst. So we have to supply this energy. But again, by now you know that we have to give them at a certain rate, which is, I told you, is equal to the power. So there is a demand for power at his end, where it has to be supplied by a certain power generated from the other end, from the utility end. So this is the demand for power. This is the supply of power. But what he actually get at the end is a certain amount of energy, which is equal to a certain number of kilowatt hours. But that must be supplied at the same rate at which he demand for power. So again, a step further, what is the importance of this? This is extremely important. This power is more important than energy for a system operator, because if you take a simple balance scale like this, and if you put all your consumer demand on this, I'm referring to the power demand, the rate at which the energy is, the demand for energy, the power, I'm referring to power. If you put that all into this side of the balance scale, if you generate a similar amount of power, your system frequency, you know that you are supplied with 230 volts, 50 hertz supply. your frequency will be at 50. But if we lose this balance, and if the consumer demand could not be met by equal amount of power in real time, we have to meet the supply demand balance in real time. If we could not meet the consumer demand by equal amount of power generation in the real time, the frequency can deviate from 50. It can reduce from 50. If the frequency deviates by just 3 Hertz, when the frequency reaches 47 Hertz, the entire power grid collapses. Entire power grid collapses. That is how important the power balance is. But quite often, people always, when it comes to numbers, they talk only about energy. So what is that power and energy got to do with fixed cost and variable cost? Before I take you there, this is what we call a daily demand curve. This is drawn for a 24-hour period. This axis is power. Sorry, it is not marked. This axis is power in megawatts. You know that from 12 midnight, the demand for electricity comes down, reaches what we call the morning peak. And when the people go back to work, reaches the day peak, it goes on like this. And when people leave offices, it comes down and again reaches the night peak, it repeats. So what I want to tell you is, at every point along this demand curve, the demand for electrical power is matched in megawatt to megawatt by equal amount of power generated. We call this period, this demand segment, the base load. The middle one we call intermediate loads, and the top ones we call the peak loads. Don't look at the numbers. Numbers are not important. They are changing all the time. We have to have particular types of generating technologies that are capable of serving each of these demand regimes. Even though for a layman, a megawatt is a megawatt, for engineers, we have to have separate typical generating technologies that are capable of meeting the supply demand balance every point along this demand curve. But that is not the topic of my today's not to this topic. So let's go to the little bit into the costing. So what is the relationship of fixed cost and variable cost in energy and power? If you take 1 liter of water, if it is 50, the 10 liters of water is obviously 500. That's a no-brainer. Similarly, if you consume 1 unit of electricity is 25, 10 units of electricity is 250. The important part is energy is a variable cost. It's a variable cost. But the power is not a variable cost. It's a fixed cost. The installed power generating capacity, the ability to generate power has been, we have invested in it, and that capacity is a fixed cost. So energy is a variable cost. Every time when you consume more, we have to burn more fuel, but not so when it comes to power. With that understanding, a little caution, I will tell you I will throw some numbers. Once again, throughout my presentation, I am not using 2022 numbers because 2022 is an unusual year because of a war situation. The numbers are extremely unusual. You will easily get lost if you take 2022 numbers into taking long-term decisions. All my numbers are pre-22. So let's take a small question. In 2021, these are actual figures. The total generation from CEB thermal plants, leaving aside coal, if you take all other CEB-owned thermal power plants run by auto diesel, furnace oil, naphtha, we have generated 1.2 billion electrical units at a total cost of 39 billion rupees. And if you simply divide the two, you will get that a unit had cost 3168. In the same year, the solar power, remember now again, caution, I am comparing these not to say one technology is superior than the other, just to tell you that, just to put into practice, tell you the importance of what I just taught you. In the same year, we have generated from the ground-mounted solar power plants, which are owned by the private sector, 154 million units at a total cost of 3.2 billion. If you divide the two, you will get 21. Now, my question is, you all are accountants, what would be the saving to the country had we generated all these thermal units with solar? Remember, solar is apparently it's 21 rupees. CEB thermal 31 rupees, everybody will say there is a considerable saving, but the actual truth is there is an additional cost of over 1 billion to the country. Why is that? That is because, let's say, now we will dig into the numbers. We will see that if you analyze these numbers, in 2021, using thermal, we have generated 1.2 billion electrical units, but the total cost consists of two parts. One part is the variable cost that is mainly spent on fuel. We call it energy cost. That is 24 billion. There is another component which is fixed cost, mainly to acquire the capacity, the fixed O&M, the depreciation, finance cost, all that, the investment cost, everything that is a fixed component of 14 billion. That is how your 39 billion came up. So what would happen if you replace all these energy units by solar power? This is what would happen. If you replace everything, what would happen is we have generated 1.2 billion units. Then all this 1.2 billion will now be generated using 21 rupees. But your fixed cost will be added on to this because you have to keep on incurring the fixed cost. It is a sunk cost which is incurred to have maintained the ability in the system for us to give you the power to follow your load. We call it the load following. Every second to second, we have to do it. So we have to acquire capacity. All that is a fixed cost added together come to 40 billion. So it's 1 billion more. So if you simply look at the numbers, this picture is not what a layman would understand from this number, but the truth is different. This doesn't mean even for a minute that this generating technology is superior to the other. It is not so. These are very complicated subjects, but just to tell you that don't come to fast conclusions, just like in the normal society. So getting a step further, cost structure of thermal plants, very quickly, the thermal cost is again, now you know that we have a variable cost and a fixed cost. Variable cost is mainly consisting of fuel cost. It is decided based on what we call the heat rate. Heat rate, in simple terms, for every thermal power plant, there is a certain amount of fuel required to generate a unit of electricity. It's an attribute to that technology. Even though I said grams per unit of electricity, actually it is not even grams. For a layman in your car, you measure the amount of kilometers that you can run with a liter of fuel, but not so in the electricity sector, because liters, depending on the time you pump fuel during daytime, the density of fuel is low. During night time, the density of fuel is high. So the amount of, though the liters doesn't have a meaning, they can contract, they can expand. So we don't work with liters, but we don't work with grams either. We don't work with mass either, because fuel batch to batch, the heat content is different. So actually speaking, this heat rate is actually, it is a kilocalorie per kWh. That is much more complicated. To make it simple for this audience, I will say it's a certain amount of grams of fuel, grams of diesel to generate a unit of electricity. So the moment the electricity prices goes up, the rupees per liter goes up, it's a matter of substituting this equation, your variable cost goes up, but your fixed cost will remain. So again, another caution, be careful in comparing the cost of generating a unit of electricity between power plants and coming to fast conclusions. Obviously, you know that you're being accountants. If you simply have a car which has a fixed rental and a running cost, if you only run 100 kilometers, your cost, somebody can say it's 50 per kilometer because still your running cost is 50. Somebody can say this car cost 1,050 rupees to run a kilometer, it depending on how you look at it. Right. Again, understanding CEB cost structure, I'm using pre-2022 numbers. You have to understand, even though for you CEB is just one entity, it is operated actually as strategic business units, a number of strategic business units. We have the CEB generation here. We have CEB's own generation. We have the private generation. We have a lot of private generators. They both generate electricity and sell to the transmission division, which is we call it the single buyer. Maybe Kanchana will later add more light onto this. Thereafter, the transmission division buys this electricity from various generating sources, CEB and private and renewable. It transmits that using the high voltage transmission network. And at the distribution boundary, they sell to the distribution companies. We have 5 distribution licensees. One is LECO, headed by Narendra. You will soon listen to him. And there are 4 distribution licensees owned by CEB. So altogether, there are 5 distribution licensees. Why I use the word licensee? We are in a licensing regime. We are in a regulatory regime. All these businesses are individually licensed. I don't have time to go into detail. So this is how the CEB structure, the functional structure. After the distribution, the end user customers are connected here. So let's throw some numbers to see where the costs are, actual costs are. I will take you 2021 numbers. We have generated about 17 billion units, but we have sold only about 15.2 because of the losses. The losses are now a single digit. It was about 20% in 2020, in the year 2000. It had come down to fairly good level. So let's see some numbers. The generation energy cost, which is the variable cost in 2021, is 147 billion LKR. The generation fixed cost in the same year is 55 billion LKR. So if you divide this energy cost by the number of units sold, you will see that the actual cost of generation in your end user tariff, this is only 2021, these figures can vary for other years, is only 9 rupees and 68 cents. Even though we had generating sources which cost 35 rupees a unit, 45 rupees a unit, 25 rupees a unit, still the average is only 9 rupees and 68 cents. I am quoting actual figures. I will let you know how this is so very quickly because my time is running out. Then if you add this, if you divide the generation fixed cost by the number of units sold, it comes to 3 rupees and 61 cents in 2021. You have to add thereafter a fixed component for transmission fixed cost. This is the only variable cost in the system. Everything else will be fixed. 14.6 for transmission, 57.3 billion for distribution. That will add another burden of 3.77. And then there is a thing called corporate cost, common cost. Normally in tariff filing, we put all these corporate costs apportioned into this because we are maintaining 2 separate accounts, the regulatory accounts and statutory accounts. It is the regulatory account that I use for tariff filing. I will not go into detail, but what does it say? If you take the summary, in 2021, the variable cost component in a unit of electricity that is served to the end user is only 9 rupees and 68 cents. You add a fixed component onto it, 8 rupees and 94 cents. The problem is fixed costs should not be expressed as a per kWh figure, but this is for comparison purposes. Fixed cost is a per billion LKR per year figure, but if you simply divide it by the number of units sold, this is how your end user unit of electricity consisting of 18 rupees and 63 cents on the cost side. The selling price is average 1637. That is where the cost is. But 2021 is a very favorable year as far as the weather is concerned. But this is how your end cost structure has arrived in 2021. So again, now you will wonder how our average cost of generation is 968. You all know that your simple solar rooftop, you only pay 22 rupees. But here I am with all these costs. People are telling we have very expensive generating sources. Still, we have managed to generate the unit of electricity, the variable only at 968. Another thing we have to remember is if all the people in the country say we don't want electricity from the CEB, we don't want you to generate a single unit of electricity, still the CEB will incur 135 billion rupees because of the fixed cost to maintain the ability to generate power, the capacity to generate power. Unless everybody in the country say, no, you take off your service wire, we don't want your generation, we will look after ourselves, then only we can sell all our assets and then we can relieve you this burden, 135 billion. But out of the total cost structure, about 135 billion is to maintain a massive asset base, generating capacity to serve you the power in the real time, megawatt to megawatt. Very quickly, my last slide, very quickly, I will tell you how this becomes so low. I don't have the 2021 figures, but let me take you to 2018 figures. I had it on a slide. This rule depicts rupees per kWh. This is rupees per kWh. This axis will tell you how much we have generated from each source in billion units. The average cost of an energy unit generated in 2018 was 11 rupees. Last time it 968 because it was very favorable year as far as hydro is concerned. 2018, it's only 11 rupees. So let's see how it had become 11 rupees. In this year, we have generated about 1.7 billion from private thermal units, 1.7 billion units from private thermal power plants at about 24 rupees a unit. We have at the same year, we have generated, we have bought about very small 900 megawatt hours from solar panels, solar electricity at about 22 plus per unit of electricity. Similarly, wind, same about 22 rupees, very small amount, 300 megawatt hours. CEB thermal power plants, average cost was about 21 rupees, 1.9 billion units. Mini hydro was much cheaper, about 14 rupees, 1.2. Then with all these costs on the right hand side, how is this point balanced at this 11 rupees and 13 cents because of these? CEB coal had generated a unit at less than 7 rupees, 5.2 billion units. CEB hydro in this year had generated 5.1 billion units at almost about 30 cents. That is why the pointer is balanced here. If you simply could move the pointer 1 rupee, one gradient onto this direction, you will be saving 15 billion rupees every year. Right now, it comes to 17 billion rupees because every year we generate about 17 billion rupees. So if you can simply bring it down by one segment here, it's a saving of about 17 billion. So you now can understand what we have to do to bring the cost down, what are the technologies. But again, you have to remember, this does not say that the renewable prices are very high. Their prices are very rapidly coming down. We are gradually moving on to this direction. Very soon you will see that some of them had even come to this side. The technology is such that we will soon see, but remember, the renewables will only give you energy. They will, the solar and wind will only give you energy. They will not give you the capacity, the ability, the power ability to supply demand in real time. So with that, I will stop because this is a very limited time given for me. This is a very broad subject. We have to talk hours and hours to educate people. But with this, I hope I have given you sufficient knowledge for you to understand the numbers that will be put forward by the rest of the presenters in the next few minutes to come. Thank you very much. I will try to join you as much as possible during the Q&A. Thank you very much, and back to the moderator.
Thank you, Lakshita. Thank you very much for that informative and very with good numbers, that presentation. We hope that you'll join for the Q&A session. So we will release you now to travel back, right? And our next speaker is Dr. Narendra De Silva, who will speak on costing and pricing in the power distribution sector. Mr. Narendra De Silva is also an electrical engineer with a PhD from UK, and he has worked in many sectors from Lanka Transformers, University of Moratuwa, then at LECO. He's presently the general manager of Lanka Electricity Company. So he's an expert in telling or talking about this subject of pricing in the power distribution sector. Over to you, Dr. Narendra. You are muted, Doctor. Still muted, Doctor.
Yes, thank you.
All right.
Thank you, Tira, for the kind introduction, and thank you very much for this nice conference and inviting me to make a presentation. I will first share my slides, I would say. There you go. I hope you all can see my first slide.
We can see.
Yes, sir. Actually, I will talk about the basic principles of electricity pricing in a broader context, and then I will come to the distribution and how this pricing structure works. Now, basically, I will be talking about the cost structure of electricity as a broader sector. Looking at the generation, actually, Lakshita treated generation quite in detail, so I might not touch the generation part, but the rest of the entire cost structure and the pricing principles of electricity, and finally, pricing and price revision mechanisms as effective and active in the present regime of the country. First of all, I would like to mention that electricity is actually a three-bundled product in a single basket. As Lakshita quite informatively mentioned, electricity in one side is energy. I'm very happy Lakshita made the presentation before me, so I'm being relieved from the burden of explaining these technicalities. So electricity in one hand is energy. We provide energy, just like Lakshita's example of water. Then not only energy, we provide capacity as well. When you want to plug in your washing machine or your microwave oven, you can simply, without any worry whether this is going to work or not, you can plug onto your wall socket, because your wall socket is designed having the capacity of providing whatever the current that this particular device required. So that is the capacity. And there's a third silent product called reliability. It's not only that energy and capacity, but when you want electricity should be there. Actually, as Lakshita also used, if I take the reference here, not 2022, but 2021, we had a fairly reliable power supply. We can substantially rely on the supply. So that is the reliability. Of course, there's a lot of development, a lot of room for the development is available. During the course of this discussion, we will understand what exactly why that this reliability issue is there in Sri Lanka. Anyway, reliability. So this is a three-product basket. So the cost, the price, or the tariff, eventually, what we cost and the customers pay will be in these three axes: energy, capacity, and reliability. Now, I will come to the next discussion, the electricity supply chain. Electricity, as now you all have understood, starts from generation, then transmission and distribution. Generation is bulk power. We generate bulk electricity. Transmission, this bulk is being transported from the locations of generation to locations of consumption. Actually, locations of generation is predominantly identified as the source points of energy. So the energy scattering of the world is not exactly superimposed on the way how people live or the geographies where the people used to consume electricity. Because of that reason, geographically, there is a vast separation. So we are building tall, large electrical towers and large lines to bring bulk power from the points of generation to points of consumption. That is transmission. Then finally, the distribution, once in this bulk power comes in, this is a retail business. Then we do the small, we bring down power to small chunks and start distributing them across the entire land space, building a cobweb of lines to bring electricity to individual households. Now, in this entire business, one should understand that this whole electricity business is only a bucket carrying job. What we are carrying is just the bucket. At the beginning, at the point of generation, this bucket should be made filled by water. So this starts from primary energy input. This is extremely important for one to understand. Electricity is only a carrier. What we carry is the gold, which is having the real value, as Lakshita showed. The major component of electricity comprises of its primary energy component. And then we incur two costs: cost for infrastructure and cost for services. We incur a cost to provide the infrastructure of converting the primary energy to electricity, transmit it, and distribute it. Furthermore, in each and every step, we incur a particular service cost. And the primary energy plus the infrastructure plus the services finally brings the cost to our doorstep cost, electricity as an energy source. This is the supply chain of electricity. Now, if we go into little bit of details, you will see that primary energy, certain chunk of energy is being dumped in, certain amount of losses are incurring, and energy comes. And the upper line, energy comes as a single line. And the infrastructure also can be divided into capacity and reliability, capacity-related infrastructure, and the reliability-related infrastructure. Actually, how is that being denominated? In Sri Lanka, we don't do the denomination. But if we do the denomination, actually how it happens is up to a base level of reliability, what is the infrastructure that you got to provide for? Classic example is, if you are happy with the existing reliability, then of course you can live with the overhead line system. But these lines are drawn across cities, busy urban and suburban spaces, where human interference, animal interferences, these lines are prone to these interferences. So subjected to that, inevitable interruptions are taking place. Now, if that, say, our society or our industry, our commercial entities need more reliable power, then probably the solution would be to go down to underground system. If you go to London city or Sydney, what you get is an underground system. Even in Colombo, you have an underground system and a very reliable supply. That particular additional chunk of money, you can account to reliability infrastructure. With the capacity, you are not increasing capacity, same energy. All what you procure out of that, or what you purchase out of that chunk of money is the reliability. So the basic capacity and energy supply, that money is considered as the capacity infrastructure, and any increase, reliability side increases, the cost incurred for that is considered as the reliability infrastructure. Equally, reliability services as well. So these three products, the costing of these individual products, the basic structure is something like this. Now, then what we do is, as Lakshita very clearly explained, then we break this supply chain into these three chunks: generation, transmission, distribution, and identify this primary energy and the losses pertaining to generation as the energy cost, and the capacity infrastructure capacity services cost as the generation capacity cost. And in Sri Lanka, of course, we don't do that. We put everything as the capacity cost. Same as in transmission, same as in distribution. So this is how this costing. First, the lateral costing across the supply chain, then the transverse costing or the downward costing, adding all the costs of the generation utility, transmission utility, and distribution utility to create the total cost. But it is very important that we create line items for these costs, because that cost segregation is very important when it comes to managing utilities and operating utilities efficiently. You should know the energy cost, the capacity cost, and the reliability. How that these costs being segregated across. Having said that, I will move into the next slide. This is a very important discussion that I want to make here. The pricing principle of electricity. The cost is one thing. In Sri Lanka, our legislation says that the pricing should be cost reflective price. Cost reflective price. There's a wide dialogue and a debate across the experts in understanding what do you mean by cost reflective pricing. So there are quite in engineering and energy pricing context, there are a couple of references or a couple of terminology that we use, nomenclature that we use for this this pricing. One thing is the cost-based pricing, and the second one is the cost recovery pricing, and finally the cost reflective pricing. All what I want to mention here is that cost reflective pricing is neither cost-based pricing, no cost recovery pricing. Cost-based pricing is based on the cost. You do a pricing, but cost and price, there can be a gap. There can be a gap. And cost recovery pricing is that you only price to recover your cost. You incur a particular cost, and typical monopolistic or oligopolistic kind of costing where you just, the government says, no, you guys cannot earn a profit. Or even if you earn a profit, that should be a very controlled minimum profit. You guys just recover the cost recovery. But in Sri Lankan law, what is being enabled for the Sri Lankans to enjoy is neither cost-based pricing nor cost recovery pricing. It's cost reflective. You have to reflect the cost in pricing. So it is somewhat wavy, or there's a gray area between these previous two price structures where this cost reflective price falls in. So that, having said that, as the precursor to this discussion, I will say the pricing of electricity, just like any other product, any other commercial business product, pricing of which you guys are far more experts than me. So this particular thing, it's very easy for me, unlike me lecturing this in a engineering faculty or somewhere. The dialogue that I initiate here is pretty conducive because you all know this thing pretty well, what I'm trying to say. The pricing must be dependent on several aspects, several economic and socio-economic vectors pertaining to the society. Number one is the elasticity. Now, the whole idea of pricing is to earn some money. Now, if there's an elasticity, demand elasticity of prices, then how to attach a price tag to a demand which is going to shrink when the price goes up? So there may be certain kilowatt hours in our sales basket which has that elasticity. When I price them, they'll shrink. The numbers will come down. There may be certain kilowatt hours, when I price, they don't shrink. Now I'll tell you a classic example. Now kilowatt hours, for electrical engineers, for us, this kilowatt hour is just a single kilowatt, monolithic kilowatt hour. But when it goes into the economy, it plays two things. Certain kilowatt hours are ingredients of producing another product or another service. Certain kilowatt hours are direct consumed. They are being just consumed. Your kilowatt hours that you use to operate your washing machine, there is no way that you can refer that cost to another, or at least there's no direct way of referring that cost to another part, another economic entity. But if you're a firm, all your costs eventually adds into, say you are producing slippers, all your cost eventually goes into the price tag of the slipper. So if I increase the cost of industrial kilowatt hour, industries there won't be a problem. These guys will increase product. By increasing the cost of their product, there may be another economic issue pertaining to them. But let's say it's a domestic market, and I increase kilowatt hours, everybody will have the same impact. Eventually the cost will go up. So elasticity pertaining to these individual items is very important in pricing. If I want to earn certain amount of money, and if I hit a thoroughly elastic demand sector, how my pocket will perform. And if I incur the same impact on a non-elastic demand, how it performs. It's a question when pricing is to be looked into. Then the third axis is the equity and distributive justice, and what we call affirmative action. I'm pretty sure you all know this, what it means. Societal equity, reasonability, and the distributive justice, how the resources are to be distributed, and the justice pertaining to the distribution of resources is also an issue when electricity type of a essential commodity being priced. There may be households who cannot afford the electricity bill. Their children are learning. A light for this, just a single light for a student who is studying. We see that as a social justice. So a patient, an old gentleman suffering from some skin disease or something, to get a fan for him, we consider that as a social responsibility. So that particular the distributive justice, so this distribution of resources in the society, how the justice to be achieved. In that regard, if you consider electricity also in that product portfolio, how electricity to be priced in order to achieve or in order not to disturb the distributive justice. And the affirmative action, you know what in law, what do you mean by affirmative action? Affirmative action is, say there is a existing unreasonability occurring in a particular social segment. We take certain action. It comes with the equity law. Law says everybody should be treated equally. But at the same time, the law says if the particular sector is being thoroughly in unreasonability, distributive justice is going wrong in that particular sector, then we can make an augmentation, affirmative action to that particular segment to keep that segment up. That's how this university in Sri Lankan classic example is that, how this selection marks for the universities been varied across districts. There are certain districts who got good access to education are being students in those segments got to earn more marks. Finally, the certain policy directives, energy conservation sort of policies, how to drive them. Now, if you look at our customers, our demand, domestic, commercial, industrial, religious, and government, and how these vectors perform on these segments has to be taken good care of when you try to do the pricing. Then comes the pricing mechanism of electricity in Sri Lanka. What it happens, Lakshit explained to you very in detail, generation prices. Generators price their generation and give it to transmission licensing. And downwards, the consumer pricing, what we call the uniform national tariff, we set up a tariff, and based on that, the distribution licenses collect money. And all that money being paid to the transmission licensee through a price called bulk supply tariff. Now, the generation prices and generation prices by Section 43 of the Electricity Act is being set up through transparent mechanism. And Section 30 set up a mechanism to this matter. Now, you see that this is an interesting way of doing pricing, downward pricing and upward pricing. So the transmission licensee get the hit. If these prices don't match, surplus, of course, is a fantastic situation which I will never imagine. But say if there's going to be a deficit, then how a transmission licensee is going to survive? But this is a dangerous way of doing pricing, downwards and upward pricing. Essentially, even if you go, it's like drilling a tunnel from the both ends of the mountain. It's a lot of engineering that you got to come to a point where the two tunnel openings meet together perfectly. If that calculation goes wrong, there's going to be a deficit. How transmission license is going to survive? Then the government comes in providing a subsidy. That is how this whole business works. If government needs a lower uniform national tariff than as calculated, then that particular subsidy got to be provided by the government. So how it works is uniform national tariff plus allowed revenue. Allowed revenue is the cost of these distributed licenses. Allowed revenue makes the bulk supply tariff. You see the bulk supply tariff. Then the next equation, generation prices minus bulk supply tariff, that particular revenue is the deficit for the transmission license. That is the government subsidy. This is how the tariff being set. In Sri Lankan context, that's how the tariff being set is that. Now these two equations are pretty simple. Any deficit, government got to give. That's the law. Only issue is that how that this across these various customer categories, how this pricing got to be varied is, as I told you, it's a very broad economic context where all those previously discussed matters got to be fully in concern in determining the tariff structure. So this is how the total business works. Finally, I must say that this way, in this mechanism, you will see that the distribution licenses are entirely ring-fenced. They have a uniform national tariff plus their cost, bulk supply tariff. So they cannot make a loss. In this electricity sector, these distribution licenses cannot. So one must understand LECO making a profit is not LECO's greatness. We have our greatness and we will harp upon that in some other forum. But here, it is not because LECO is great. LECO is great in different ways. That's a different story. But we make a profit simply because that we are ring-fenced. Equally, if CB also does this ring fencing, they use this ring fencing, their distribution licenses will also equally be profitable. Similarly, the generators are also profitable. In Sri Lankan context, there is one particular business which is going to make a loss. That is transmission license. Why CB is making a loss is very simple, simply because they don't segregate. If they segregate themselves, this story is very simple. Everybody will see the transparency. Everybody will see why that this transmission license is not making a profit. Everybody will see what is the government subsidy that got to be done. And that if the government does not give the subsidy, obviously, transmission license is making a loss. Nobody is saying that Royal College is making a loss. Nobody, Royal College does not charge a single cent. But they have a huge cost. So they're making a big loss. But nobody says so. Because it's so transparent. Everybody knows that it's a government subsidy. It's simple as that. Thank you very much. That's all from me. Over to the moderator.
Thank you, Narendra. Very, very informative and very well explained presentation. Thank you very much. Without wasting our time, we go to our next speaker. Actually, it was to be done by Mr. Damita Kumarasinghe, DG of the Public Utilities Commission of Sri Lanka, but he was unable to participate today because of official commitments. But he will be replaced by Mr. Kanchana Sirivardhana, who is the Director Tariff and Economic Affairs of the PUSL. Kanchan is also an engineer accountant, so he's very well versed in the subject, and he has been with the PUSL for some time. So Kanchan, over to you to discuss the proposed revision of electricity tariffs in 2022 and do a presentation. Thank you very much.
Thank you, Mr. Terrell. So I think my life is made easy by the previous presenters because they have given a good introduction to the way the electricity is priced. So can you all see the screen?
Yes, Kanchan, you can see. If you can put it to slide, that's right. Now, okay.
So actually, earlier it was DG who was supposed to arrive, but he has a urgent meeting to attend. So I'll do his presentation with few more slides to make it my way of talking. I will actually not go into details like the fundamentals because I think it's already covered. I will go into the legal background in Sri Lanka and the current status regarding the costing and the pricing, because all the principles are already covered, which is quite good to know. Now, the legal requirement, as of course briefly mentioned by Dr. Narendra, is that there are two types of tariffs. That is listed under Section 30 of the Sri Lanka Electricity Act, which is a law that came into effect in 2009. So these are like tariffs charged by the transmission licensee. That is the boundary tariffs between transmission and distribution licensees. And the tariffs, of course, the normal tariffs known by the customers charged by the distribution licensee for the sale of electricity. So we will discuss mainly on the distribution tariffs in this case, because that is the topic these days. So as per the law, so these tariffs must be set by the licensees, that is the transmission licensee or the distribution licensees, as per a methodology approved by the Commission. So these rates or the tariffs are required to ensure that the reasonable costs are recovered. So it's not exactly cost reflectivity or cost-based tariff, it's recovery of reasonable cost when the licenses are operating in an efficient basis. So that is the key here. So efficient basis is a must, and they can recover the reasonable cost. So these tariffs are to be approved by the PUCSL according to the policy guidelines approved by the cabinet, that is coming through the ministry. So they are to be published as well. So three things: they are to be set by the licensees, recover reasonable cost when operating on an efficient basis, and approved by the Commission. Those are the three requirements as per the law. So also under subsection 3, there's a requirement to have a timetable for review, and there's a requirement to have a public participation. So this actually we are now at that stage where the licensees have filed end user tariff proposal, and we have put it up for stakeholder views, and we are in that process. And after that, there will be a oral session where the stakeholders can come and give their comments in future. So subsection 4, there's a element of subsidy that is allowed by law. So the government can provide general policy guidelines that require certain groups of customers to be subsidized or given concession, and there may be cross subsidies as well, by charging a little higher from certain group of customers and transferring it back to certain groups who are vulnerable in the economy. So those are allowed in the law. So the key responsibilities, the tariff setting, of course, is by the licensees, and the approval is by the commission. So they have to actually show that their costs are reasonable and they are operating efficiently. So that should be shown and proven by the licensees. And of course, the declaration of subsidy and the policy related to that subsidy is by the government. Cross subsidies are also, of course, under the purview of the commission. So in this methodology and the law, I think the key assumption is that the licensees are responding to financial incentives. If they are given an opportunity to make a profit, they will maximize it. And of course, they will abide by the law. So that is, everybody should abide by the law. Everybody should know the law. So that is the key assumption here, and which is not actually factually seen in Sri Lanka at the moment. So now, like if you take we had several tariff revisions in the past. You may remember back in 2013 and 14. Actually, 2014 we had a reduction in electricity tariffs, customer tariffs. And during the 2013 decision, Commission put forward certain preconditions that is required to be fulfilled by the licensees before coming for a tariff revision again. So these conditions like independent dispatch audit. That is, that the dispatch audit means the transmission licensee on a daily basis buys power from generators. So that process is controlled by the system control center that is operated by the transmission licensee. So then that process should be audited by an independent party. That is a requirement in the license. So we have not seen that happened throughout the last several years, and so we want that to happen on a regular basis by CEB. And also, I think Dr. Narendra mentioned about a transmission licensee accumulating a subsidy requirement, as a loss or a profit should be accumulated at the transmission licensee. So they must operate what we call a bulk supply transaction account that reflects all the transactions in the industry. That is purchases from the generation licensees and the selling electricity to distribution licensee. So that account will show the subsidy or the loss that is accumulated at the transmission licensee. So at the moment, that account is not physically established because CEB is not functionally separated, financially separated, so that that's not transparent. So that's an issue, because if the government or the public to see that subsidy requirement accumulated in that account will be easy for any future tariff revisions or any government subsidy injection. So also we have, because I think Akshita mentioned that there is a purchase agreement between the generators and the transmission licensee. That is a long-term agreement normally for the supply of that service. So of course, the private parties have these agreements in place, fairly complex documents, but for CEB we don't have it. So that's an issue, because then how the efficiency guidelines and the transfer of funding between these two parties are not very transparent and regulated. So that's an issue PUC has been trying to get through, and so that is a requirement in the license as well. Similar to that, you need power sales agreements between transmission licensee and the distribution licensee. So those agreements are also not there, including LECO. So these transactions are not regulated as required under the law. So this, as I said before, the revenue separation has not happened, and the heat rate testing, what I mentioned under 6, is a a requirement to test the fuel consumption rates of these thermal power plants at CEB and IPPs. So that has also not happened. So these are the concerns of PUCSL to ensure that the costs are reasonable. So that's a major issue. So as I said before, the structure of the industry, sorry, there's a noise coming. Sorry. So these the boundary, the transactions are regulated through these power purchase agreements, and we have issued certain guidelines on those transactions. So that's how we regulate these transactions in the industry. So those are the tools we have used. So as per the law and the methodology we have agreed upon, so as mentioned by Dr. Narendra, distribution licenses operating efficiency should be cash positive. So similarly, generation licenses, if they are operating under PPA and if they are operated efficiently, they should be profitable. Only the transmission licensee will have a subsidy requirement accumulated in their accounts. So I think I can skip because Mr. Lakshita explained the features of a power plant, because PPA, power purchase agreement, is a very complex document. If you take a thermal unit, it has a fixed component, and that capacity payment is dependent on many things like the fixed O&M, the borrowings, and the return on equity. And of course, there is a target availability. So if the plant is not available for a particular percentage of time, they will not be paid the full capacity charge. So, and the energy charge, of course, is an agreed heat rate, and there are other things like the variable O&M and start-stop charges in that PPA. So that is a pretty simple way of looking at a PPA, and we have modeled all the IPPs like that. CEB ones, of course, we have a very basic way of coming up with the capacity and energy charges for our tariff purposes. So if you take allowed revenue for the distribution and transmission licenses, we work on a 3-year window. So that is they have a asset base, and the depreciation is also allowed as a return of capital. The capex is modeled, and you come up with a average asset base, and upon which you normally give a return on assets. That is the allowed profit, and taxes and operating costs are allowed. So we look at 3-year window of their costs and come up with a allowed revenue per year, which is scalable based on CCPI and other indexes. So so that is a pretty I would say basic way of coming up with the cost. I think Dr. Narendra mentioned how they are stacked up and allowed at a consumer tariff. So we during past, if you look at we've had about 5 or 6 tariff revisions done by PUCSL back in 2011, 2012, and 2013, and then a reduction in 2014. So after 2013, Commission has put forward these conditions in approving a further tariff revision. So if you look at the finances in the sector, we've had fairly good years up to about 2015. CEB was making fairly good progress, because we did pricing adjustments on time. But then since 2013, rather 2016, the sector finances have deteriorated because CEB has actually not filed a cost tariff review. So only in 2016 they made a filing for 5% increase, but that was not required because 2015 was a profitable year. So if you look at now, the situation is not very good, because it's making substantial losses, especially due to this fuel price revision by the government, the CPC, and the international coal price increases during recent past. So I have gone through this. They have submitted a tariff revision, and we have asked for government policy directions regarding any subsidies required for certain categories. And so we are awaiting that as well. So we have opened it up for public comments. So if you look at the cost forecast, of course, this is little old, like April 2022. The sector cost is going to about $500 billion now, mainly due to the fuel price increases, and there is on average, including capacity, the cost is around 30 rupees to deliver a unit of electricity. So, but so then for this calendar year, for 12 months, the revenue forecast is 286 billion. So then there's a big gap. And with the proposed revision, it's supposed to more or less break even, around 80% increase that is proposed. But the key problem is that if you look at now, in July or June 2022, the prices have escalated further due to rupee depreciation and plus the international oil prices and the coal prices. If you look at jet price, it has hit around $340 a metric ton, which is more than 3 times the normal price. And same with diesel and furnace oil because of rupee depreciation and international situations. So basically, we see a $2 trillion industry in the years to come if the prices don't drop in the future. So that is the case. The coal futures are also priced more than $300. So the situation is not very good in terms of finances for CMA. So that is a big concern at the moment. So we want to go ahead with this tariff revision as soon as possible. So then what we see is an energy security issue, because now we don't have enough energy to apply 24/7 power, but it has another dimension now, because now it has become unaffordable as well for many households. So that is a big concern. Although it is available, it may not be available for many parts of the economy. So that's the concern. So main issue is actually the cost composition in the generation sector, because we use a lot of fossil fuels. More than 60% is coming from fossils, but the cost is more than 92% for that those sources like oil, coal, and so on. So if we had added more renewables, the cost increases would not be that much, because they are paid in rupees. They are pretty cheap because of local indigenous nature in their primary energy supply. So that's all for me. Thank you very much.
Thank you, Kanchana, for that yet again another informative presentation looking at the PUSL side of pricing of the products. Before I invite the next speaker, I encourage everyone to send your questions in the Q&A section so that we can go to them after the next speaker's presentation. So the next speaker is going to be Mr. Rajgopal Mohan, who is from India, of course. So we welcome him very cordially for this Sri Lankan seminar of this program. Mr. Mohan is a member of Institute of Cost Accountants in India and an executive director of NLC India, that is Neyveli Lignite Corporation Limited. He's an expert in pricing in the electricity sector. So now I invite Mr. Mohan to do his presentation. Over to you, Mr. Mohan. You are muted, Mr. Mohan. Still muted, I think. Your I think your computer is muted.
Now clear?
Yes, now okay. Now okay.
Thank you very much. Good evening to all of you. First, I thank you for allowing me to participate in this program in costing and power generation sector in India experience. See, earlier our power sector prices are regulated. Prices are fixed by mutual consent by the power generator and the electricity boards. Every state is having electricity board. With that, we will be going on negotiation. Maybe negotiation will go for 2-3 years, and tariff will be fixed. Later, for under programs of Government of India, new Electricity Act was brought in 2003, and also Central Electricity Regulatory Commission at central level and at state level, state electricity regulatory commissions were formed. The intention was to bring more competition, participation by the private sector, transparency in pricing, and of course, better efficiency and all. To large extent, this has been achieved. The Central Electricity Regulatory Act, Regulatory Commission deals with power generators who are supplying power to more than one state and all central power sector companies. As far as the state is concerned, the State Electricity Regulatory Commission, it deals with state specific. Something is generated within the state and supplied to the same state, that is covered. And also, the state electricity boards are purchasing power in open market for short term or long term, and also entering into power purchase agreements. Everything has to be approved by the State Electricity Regulatory Commission. Actually, after introduction of this, there's a substantial improvement in efficiency level, power plant load factor, everything is there, and transparency in price, and price has stabilized. And the generation has gone up in the last 15 years, nearly 80-85% improvement is there. I'll go from regulation because the power sector is regulated and prices are fixed only by the Electricity Regulatory Commission. So unless we know how the price is regulated by the Electricity Commission, we will not be knowing how to go for cost control improvements and all. This Regulatory Commission has issued regulation for every 5 years for thermal, solar, wind energy and hydro energy for each and every item. Generally, it is for 5 years. Once that is published or notified, the generator should file an application for fixing the price for the next 5 years. Here I want to add one more thing. Now all the prices are fixed only through competitive bidding. You have to quote the price. The price is fixed by CRC, but there are some exemptions for central sector where some issues are there, it can be done. But for all the existing plants, it is done by Central Electricity Regulatory Authority only. Central Electricity Regulatory Commission, CRC in short. Initially, when CRC came into existence, everyone had a fear. Our interest will be affected. The generator, or distributor, or consumer, everyone thought they will be creating issues. It's not the case. Over the period of time, we have learned how to handle things, and the power tariff has stabilized and the quality of power has definitely improved. The Central Electricity Regulatory Commission, that is CRC, fixes price for thermal stations, whether it is a coal-based or lignite-based. They fix the price in two parts, as being followed in Sri Lanka also. One is capacity charges, another is the energy charges. Whenever we submit the application, the prudence check is done by the CERC. Here the capacity charges, what are the contents? Return on equity, interest on capital, depreciation, interest on working capital, and operation and maintenance expenses. For working out the capacity charges, things considered what's the life of the plant. For a thermal plant, it is considered 25 years. solar and wind also 25, and some states consider wind as 20 years. The capital, 70% of the capital is financed through debt and another 30% through equity. If the generator adds more capital, suppose 40% and 60% debt, for that 30% is eligible for the interest which is allowed for the 60%. And interest during construction, then normally the project construction period is about 3 to 5 years, depending on the size and other issues. Whatever expenditure incurred, that is incidental expenditure, that is on salaries, electricity, transport, or any other expenditure incurred during the construction, and also interest incurred on the borrowings or can be included in the cost. But this expenditure can be included only about up to the scheduled date of commissioning. Scheduled date of the commissioning is the date in which it has to be commissioned as per the sanction, or earlier it was sanctioned by government, and now all the publicity boards are empowered to take their own decision, going to their board and get the approval. Once they notify it as a COD date, these will be allowed only after up to this point. This interest and IEDC will be allowed only up to this point. After that, it will be allowed if it is due to the force majeure condition. So that is force majeure means beyond the control of the purchaser. In this case, the force majeure does not include the supplier's delay. The generator cannot say that supplier has delayed. That is your problem. That is their. Then any equipment for emission control, railway sidings, transport, etc. is also permitted. After 25 years of life, the period the life is decided as 25 years. After 25 years of life, if they want to continue the plant, they have two options. They can go for renovation and modernization. They have to work out the cost and get approval from the CRC. In that, they have to make a cost-benefit analysis in running the plant. In some cases, it may be beyond running because of the change in technology and so many other issues. If they don't want to opt for R&M, that is renovation and modernization, they can get a compensation allowance of about 9.5 lakhs or 10 lakhs per megawatt, which can be used as a capital expenditure. Then when we talk about the capital, the expenditure, return on equity. Return on equity is considered for the 30% of the total cost. 15.5% per annum is the interest rate, but this is post-tax. That is net of tax they should get. Suppose 30% is tax, so 15.5 divided by 0.7, it will be coming about maybe 20% or something. It will be, that is the rate of return. And there are some penalties if they not adhere to some measures and all. Then for the 70%, they have to go for market borrowing or whatever method they are doing it, they are borrowing the. For that, they are eligible for reimbursement of interest. In this interest, every year when we go for a treasury management, when we go for a loan financing, it may have some 13 years or 14 years period of loan, and the moratorium period may be 4 years or 5 years. Normally, for construction period of 3 years plus 1 or 2 years for stabilization, it is done. As far as regulatory authorities are concerned, they are not concerned with all those things. Your moratorium and all is not the issue for them. Once COD is done, the first repayment starts 1 year after that. Then every year 1 year. But for what they do for the second year is, first year suppose you borrow 100 crores, entire 100 crores is taken and the interest is allowed. That is a composite interest rate is allowed. For the second year, what they do is, whatever depreciation availed during the period, suppose they availed some 10 crores as a depreciation, next year loan will be 100 minus 90, 100 minus 10, it will be 90. Whether you are paid or not paid is not the issue. So 90 crores, that is the depreciation, amount equal to the depreciation availed will be considered as a repayment of the loan. Every year it is done. You may have for 10 years, 20 years loan, but it is done this way only. And even for the interest on working capital, for running a plant, we need working capital. The working capital is considered as the entire borrowing. For that, we need fuel cost, secondary fuel, O&M cost. We have to stock some coal or lignite or something. Those things are considered and interest is allowed for that. In addition to that, water charges are considered. Whatever charges we incur on water, in some cases, we may take the water by about 20-25 kilometers through pipeline and all. That capital cost is allowed. O&M cost is also allowed, and water charges, if any. Like that, some special security measures may be required, especially coastal plans, some militant attack, terrorist attack and all. To overcome some safety measures, equipments may be required. Like that, in the jungle area, some Naxalites or something will be there. For that also, it can be considered. While calculating the depreciation, 10% is considered as a salvation value, and balance 90% is depreciated over the period of the life. But in this case, for the first 12 years of the commissioning period, the higher depreciation is allowed, about 5.58%, 5.28%, and for the subsequent period, it is lesser. This O&M cost is determined by the CERC every year. They, depending on, see, for a new plant, they are giving, depending on the size of the plant, 250 megawatt, 500 megawatt, 800 megawatt and all, they are giving it. For the existing plant, they consider their past actuals and give for each plant. Some very old plants require very high costs of O&M, and smaller units are getting it. Suppose you are putting up more than one unit, the subsequent units will get only 90% of what is allowed for the first unit. Then these capacity charges, we were talking about the fixed cost and all, capacity charges and energy charges. These capacity charges are also divided. It should be recovered during the, every year it has to be recovered based on the plant availability factor. They have fixed 85% of the period should be available. Plant should be available for 85% of the total hours in a year. In that case, you can only recover the full capacity cost. This capacity cost was earlier, it was charged on pro rata basis. Now it has been differentiated in the last 3 years. What they have done is, they have taken the peak hour charges and off-peak charges. During peak hours, that is, they have considered 4 hours a day will be a peak hour and 20 hours will be off-peak hour. This regional load dispatch center will notify this is a peak hour and this is the off-peak hour. The capacity charges will be divided into two, and this capacity charges for the off, that is peak hour, will be 25% higher than the off-peak hour. So that will help these generators as well as distributors. Then incentive is also given in case during peak hours you are generating more power than scheduled. You will be getting about 65 paisa per unit, and in the case of non-peak hours, it will be about 50 paisa per hour. Further, this adjustment, that is some excess, some shortfall, everything is permitted within the peak hour and the non-peak hour. Interchange is not permitted. With regard to energy charges, this fuel, as you are following, the fuel cost is fixed here based on certain criteria. The station heat rate is first worked out. Regulation says this is the peak hour, sorry, this is the station heat rate for 250 megawatt, 500, subcritical, critical. They are giving a specification and say this is a heat rate. Based on that, the specific fuel consumption is decided. But for the existing plants, their efficiency may be lower. So what they have done is, they have considered the whatever designed capacity stipulated by the manufacturer, and also their past practices and past actuals, and with that they are fixing for each unit. Then this, if there is they can charge the electricity boards or consumers or discoms based on the specific fuel consumption. In that, the price is actual price. Suppose we are getting a coal, we are not getting entire coal from locally. So we get the coal from some mines, and each mine has a different pricing. And also we import coal. So we mix everything, and based on the calorific value, it is considered. It is based on actuals that is permitted. we can recover the cost. And with regard to the secondary fuel, this is oil. Normally, it's about 0.5 ml per unit for coal-based units and 1 ml for these lignite-based units. Earlier, it was about 2, 3 and all. Now they have reduced it. Here, whatever norms, we can claim it. No issues at all. If it is more than that, we have to bear it. Here also, then another thing is the auxiliary power consumption. For running a plant, you need power to be consumed. That auxiliary power consumption is also fixed by the regulation. That is about 200 megawatt and all is about 8.5%, and higher it will be around 5.75%. If any old units require specific any concession and all, that is also considered by the CRC and it is done. And there is a sharing of incentive for the savings and all. Whatever station heat rate savings is there, by that the specific fuel consumption will be lesser and this generator will be saving a lot of money. Then secondary fuel consumption lesser than that norms you can save. Then auxiliary consumption, suppose your utilization is 8% against 8.5, you will be saving. Whatever savings you have to share 50% with the discount. Only 50% you can retain. Another thing like that, clean energy mechanism and other savings and all, they will get first year 100% they can avail. Balance they have to pass on something to the discounts. Minimum they can retain 50%. Maximum they can retain 50% thereafter. Likewise, other income, if any, that is the sale of fly ash, something will be there like that, miscellaneous expenditure. Those expenditure, those income should be shared in the 50-50 with the discounts. With regard to the solar and wind, it is predominantly dominated by private sector. The government is about 56,000 megawatts are there. Maybe about 20% only government or even lesser than that. All other is done only by the private sector units. Here is only a single part tariff. Though guidelines are given by the regulatory authorities, it is done mostly by competitive bidding only. In the competitive bidding, we are getting very good rates. Solar is about 2 rupees 50 paise or 2 rupees 60 paise. And wind energy, we are getting about less than 3 rupees. So it's working very well. And in fact, in one case in Andaman, we tried to put a solar plant. There, everything was through DG set only. All power was generated only by DG set, and the price was higher. And we were invited to examine the possibility of putting up solar plant. Actually, 2 public sectors, we have put about 20 megawatt. In fact, they have a hydro plant where this is used only for 3 to 4 months in a year. So what we suggested to them, we put up a solar there. We will put about 30 megawatt. You use it, you will have a pumped storage there. Down, we will have a storage. In the most of their power consumption is between night 6 and 10. It's about 80-85% is only between night 6 and 10 because there are no major industries and all. So what we suggested, evening 5 o'clock, you start your generating plant, hydel plant, and pump. Use it to generate the power. So when the and that will have a storage below. In the morning when the sun comes, you will be generating the solar energy. Use it to pump the water top to a storage tank. But it did not work out because they have a very limited land. About 93% of their entire place is covered by forest. So many regulations and also we could not do it. With regard to cost, because our cost is entirely based on regulation. We were talking about the discoms, laws and all. Here also most of the discom generating companies, depending on discoms to get the money, we have a lot of difficulty in getting the money. There's some delay. In the case of renewable energy in solar and wind, it takes between 6 months to 1 year. And at least in thermal, because of the strict regulation and all, LC, we have a letter of credit and all, some conditions, surcharge. So we are able to get the money with small delay. We are giving some incentive about if we pay it within the 5 days of billing, about 1.5%, or within 30 days is 1%. Penalty is 1. That is surcharge. We call it a surcharge. Is about 1.5%. When coming to the cost control, the role of accountant is collecting the information, compile, present the figures, and point out the deviation. Everywhere it is like that. It is more so here. It's only the line functions. There is like field engineers, planning engineers who have to do it more. The areas, what we are doing is of having a budget. We are going by the regulation. Whatever regulation stipulates is called the norm. From that, actual is worked out, and what are the deviations we are finding out. One is power load factor, plant load factor. In that, what are maximum capacity and what is actual generation is worked out percentage, maybe 80, 85, 90. What is the deviation that is checked? Then plant availability factor. Plant availability factor is also 85% is the norm. What is our actual? Normally it will be 90, 92% and all. And if there is in any months, any shortfall, any damage or something, what has happened, that will be reviewed. Here, because of the recent regulation, peak and off-peak availability, excess and shortfall, we thoroughly review it, work out every day or every week, every month it is being reviewed. Then because of we generate more in that peak hour or excess peak hour, we are getting incentive. So in terms of rupees and units, we are working out and considering that. Then the specific fuel consumption, the fuel consumption is 0.5, this is the rate, 0.49, we are getting 0.05 as a savings after sharing. So that is considered for cost control. Likewise, secondary fuel consumption. Then this O&M cost, like any other sector, we are considering. What is the norm given by the regulatory authority? They give 22 lakhs. How much we are spending? Every month that review is done, and we are attempting control. Then interest on capital. The interest on capital is worked out, as I said, whatever that is loan amount minus the depreciation is considered. For that, interest is worked out. But suppose the rate of interest is coming down, the last 3-4 years it is coming down. If your interest is coming down, we can go for the refinancing for a lower rate. Whatever refinancing expenditure incurred, it can be collected from will be reimbursed by the discounts. And whatever savings in the interest, that will be shared by the generator and discounts. Then this auxiliary power consumption is a major thing, is for a pure technical thing that is being considered. One major issue is the receivable, collection of receivables. There's a considerable delay. We talk about surcharge and all. Normally, they don't give surcharge and all. What to do? Once in 10 years, you will go for a discussion, pay 50% and get something. So what we have done in the recent, about 6-7 years back, we said they will not even recognize this surcharge when we raise the bill every month. What we have done, whatever payment received from the electricity board will be first adjusted only against the surcharge. Balance will be adjusted against the current. So some discipline has come in this collections. And another thing, another area we are now going through is selling power through exchanges. Power exchanges, we are doing it. And power surrender, sometimes power excess power is there. Power is surrendered by the electricity boards, that they are giving some advance notice. We are selling through exchanges and recovering the cost partially, if not fully. With this, I am concluding. I wish Sri Lanka Electricity Board recovers the full cost and the economy of the Sri Lanka also improves. My prayer for that. Thank you.
Thank you, Mr. Mohan. Thank you very much. Now we'll shift to the question and answer session. So there are some questions come from the Q&A and the chat box. First, I will go to Kanchana Sirivardhana. PUSL has become the popular topic now. 2 questions for you, Kanchana. When you are doing tariffs, do you all benchmark against regional countries when you are doing tariffs? And who is responsible for having the final tariff? Is it preparation of end user tariff. Tariff, is it CEB or PUSL? There are two questions.
Yeah, the last one, as per the current approved methodology, is the CEB that should submit an end user tariff proposal. So approval is by the PUSL based on government policy inputs. Regarding benchmarking, of course, we have in the past, that is around 5 years back, we have done benchmarking study on distribution costs. Then again, even earlier, somewhere close to 2018, we did a benchmarking on generation cost or O&M cost, because heat rates of what are tested. The other costs, we did a benchmarking study. On top of that, we also have the benchmarking between CEB distribution licenses and LECO. So that is also there. So we use that for our decision making. Yes.
Okay, thank you, Kanchana. I'll next go to Lakshita. Are you available, Lakshita? I don't think he's available. So I'll go to Narendra again.
Lakshita is there, but not open.
Not open, no?
Okay, you go, then he might come. Yeah, he's okay.
Cyril, I'm back now, on and off. My signal may go off. Is there any question?
Yeah, Lakshita, two questions. Again, the last one I asked whether the end user tariff is now Kanchana said CEB is responsible. Is that correct? And number two, there are questions on renewable energy usage like biomass, solar. Can we increase them? So those are the two questions.
Coming back to the question of whether we can increase biomass and renewables, yes, of course. But there again, there is a number that a lot of people don't know, which is a lot of people think that if you have to make the country energy independent and more rely on renewables, a lot of people look at the sector. But just a minute. But a lot of people don't know that electricity only is constituting of 13% of the total energy use in the country. Only 13%, 1-3. A lot of people think that the moment you get the whole electricity into renewables, the whole country will be more relying on renewables. But still, 87% of total energy use in the country is not from electricity. If you take the total energy portfolio of the country, still majority is biomass. A lot of people still yet again that don't know this. Still, the majority energy that is used by the end user customers is still biomass. It is still consisting of about 40%, and that is fast coming down, rapidly coming down, because people are migrating from firewood and to other forms of commercial fossil fuels. This number was as high as 63% in 2000. It had come down now to about 40%, 44%, I think. I can't exactly remember the figure. So there's a lot of potential in increasing the renewable, but the sector you should look at in doing so is not the electricity sector. We have a very big opportunity right now. Every crisis is an opportunity. This crisis, with the use of this crisis, we can still push a lot of people back to using a much more convenient energy conversion technologies. There are a lot of things. Even the current national energy policy hints so. And current national energy policy compel the government. They ask the government, please use the people, those who are migrating from the firewood and the biomass. Try to keep them using those forms. Not only the domestic households. Still, I don't know whether you know, 77% of the country's energy used by the industries, the industrial energy use, 77% is still biomass. These numbers, a lot of people may think that the predominant energy forms used by the industry may be electricity or petroleum. No, it is not so. It is still biomass. But there again, they are fast migrating to other forms of commercial fossil fuels. The industrial thermal energy is mainly consisting of the industrial furnaces, industrial boilers, industrial kilns, furnaces. They all are mainly run on biomass and firewood. Our tea industry runs on firewood, but the percentage is rapidly coming down. Nobody's looking at it. Everybody is looking at the electricity sector because that is where the money is. So if you're asking about whether we can go for more renewables, yes in the electricity sector. Much bigger yes in the rest of the sector. We can go. We are anyway already we are progressing towards renewables. But again, if you think, if you try to recommend that as an option of reducing the cost, there again, we have to see whether it would actually bring down the cost. Because as I start with my earlier presentation, people are only looking at the energy component. There is another component, capacity. The solar or wind will not give us capacity. We have to get it from other sources. We call them the firming. We have to get like batteries and other forms. So you have to add both the cost and see which is cheap. But renewables are getting cheap. Also, irrespective of the cost, the policy had already forced us to go for high renewables. So we are doing that. So yes, we can go for renewables. We should go for renewables, but more so in the rest of the sector. So that is my answer to that. There is a small clarification that I would like to make, Tiral. I think Kanchan also touched this. Our position is not what explained by Kanchan as about the tariff filing. I think there was a question asked from him, who has the responsibility to
that's right.
calculate the end user tariff. It is the responsibility of the Public Utilities Commission from 2011 to 2020. Kanchan is right. From 2021 onwards, they had changed it to the responsibilities changed to the Public Utilities Commission. But if you look at the Act, what the Act says is the tariff has to be calculated based on a cost reflective methodology. The cost reflective methodology is called the tariff methodology, which is prepared and approved by the Public Utilities. That document very clearly says whenever there is a uniform national country is in place in the country, the responsibility of calculating the end user tariffs lies with the Public Utilities Commission, not the utilities. So that is why CEB had only filed for its revenue requirement, but CEB had not calculated the end user tariff because not one licensee can calculate the entire tariff. The uniform national tariff is the end user tariff applicable to the entire country. No single licensee is able to calculate the uniform national tariff. So whenever there is a uniform national tariff is in place, that responsibility is with the regulator. I don't have the computer to show you the exact clauses, but Kanchana knows what I'm referring to. But these are areas that we are regulated and the licensees have certain contentions. So I don't want to go into that contest, but I just want to clear the matters. 2021 onwards, they have made the change in the methodology. Now, yes, now they have put the responsibility back into the licensees. But throughout the last decade, it is the responsibility of the Public Utilities Commission to calculate the end user tariff. The responsibility of the licensees is only to file for revenue requirement, to which we have done throughout without fail. So that just a point of clarification. What is the other question that you asked? There was
Only these
question.
two. Only these two.
Right, okay.
Can I ask a question, Lakshita? You know,
Sure,
this
sure.
is about now the power sector. You have the three sectors that was mentioned earlier also. The generation, transmission, and distribution. Now, at the moment, the CEB is doing all three, you know. So what the suggestion was that whether these could be operated separately, maybe still as maybe state units, but like what LECO is operating, can we operate these three separately so that there will be better management and also maybe more transparency in each of the activities?
Answer is yes, and to a certain extent, even now they are operated separately. But as you said, there is a certain distance that you can still have to go. One you have to understand is currently we are in a regulatory regime, which was initially, there was a reforms, Electricity Reforms Act in 2002 that anticipated complete unbundling of all the sector utility into different companies. But what finally came up in 2009 is to functionally unbundle the utility into different functions. That is why I said we have 4 different distribution licenses. We have 1 transmission licensee. We have generation licensees. So even now, the CEB, if you look into the CEB's accounts, we are preparing 2 sets of accounts. We prepare the statutory accounts and we prepare the regulatory accounts. It is the regulatory accounts that we submit for tariffs. If you go through the numbers, these are already functionally separated. Though they are not independent entities, they are functionally separated. So to the extent that transmission licensee actually meter all the energy sold even to the CEB distribution licensees, they issue an invoice. And even the CEB own distribution licensees pay back to the transmission licensee in the way what we call the transfer voucher. So LECO pay back in terms of real money. CEB's internal distribution licenses pay back in terms of transfer voucher. So they are all recorded in separate accounts. But as you very correctly said, we can go another step forward. There's nothing preventing us from going there, but that is not the problem. You know, in fact, we can do that. There's no harm because already everything is in place for us to go there, right? So even now, I agree with Kanchana, the sales agreement from generation to transmission is not fully in place. So we agree with the regulator in that. For CEB, we have a document which we call the agreed values, which is form of a power purchase agreement. But since these two entities are not full, entirely legal bodies, we cannot have an agreement between a CEB entity and a CEB another CEB entity. But still, there can be better power purchase agreements. But thereafter, all the energy transaction is done separately as if we are separate companies. But still, the whole CEB finances are not accumulated in the transmission licensee, but they are in the transmission licensee's accounts. Every month, we submit what is called the bulk supply transaction account that records all the transactions the transmission licensee is making, the buying part and the selling part to distribution, and even the losses, and we submit to the regulator. So the accounting recording part is there, and because that is what we were asked by the current act, that is what is asked from us by the current licenses issued. So if the government want to take it further, completely unbundle, make it separate companies, there's nothing preventing us from doing that. We are in that direction, almost 95%. We have come there. So, but that there's nothing preventing us from going further distance. But we have already functionally unbundled.
Just to tell you, no, actually the regulator mentioned that one of the two shortcomings. So one is to establish bulk supply transaction account that they mentioned. Other one is the power purchase agreements for your own plants. Now these are two comments that they have made on what you have given them.
Bulk supply transaction account is already established. If the regulator thinks that we are not doing that, there's enough power given by the regulator in the Public Utilities Commission Act to send us enforcement orders so that we are compelled to do it. So if they think that we are not doing something, there's no point in preventing us from getting a tariff, but it's a matter of sending an enforcement order. So if they think that we are there, we're not operating a bulk supply transaction account, why haven't they send us an enforcement order? We have a practical bulk supply transaction account, but the difference of opinion between the regulator and CEB is they want to open separate bank accounts. But what the license says is accounting records. So this is where the whole problem is, whether we want entirely separate accounts to be maintained or accounting records to be maintained. But the word accounting records is mentioned in the license. So we are following what the license says. In fact, if you go through the document letters sent by the regulator to the license CEB, they say establish a physical bulk supply transaction account. That physical word is not there. But we are already have established bulk supply transaction account. Every transaction that is taking place in the transmission licenses business is recorded in this accounting record. It's already there. As for the power sales agreement between generation and transmission, yes, I agree to a certain extent with Kanchana. That is something lacking. Not because anything that CEB has to hide, but when you go for competitive tendering for a new power plant, it comes with all these things. But when you convert the existing power plants that has been in existence for a long time and try to put up power purchase agreements, they are not at the same quality as those power plants that for which you draw power purchase agreements entirely in new. So there are a few drawbacks which we can correct, right? So I partly agree with them, but not this comment on the earlier one. As for the bulk supply transaction account, this has been, there are a number of letters exchanged between CEB and the regulator, I don't think we can iron them out in a forum like this. So I will stop at that point in answering my question.
Thank you, Lakshita. Just one thing, on the plants. Now you mentioned that they all are having very old plants, so which means that the cost of production must be very high in those old plants. Are you all take any action to maybe to modernize them or to replace them with new ones?
When it comes to hydropower plants, though the power plants are old, they still have a lot of life left because they have very long lifetime. But you are very correct. There are certain power plants, particularly there is a power plant, 5 number of power plants. We call them frame 5 gas turbines at Karanatissa. Extremely old, extremely inefficient. But unfortunately, still because we could not get enough generation capacity installed, we are unable to retire them even though they are so inefficient. It is like you are having a very old car, very inefficient car, but because if you don't have another means of traveling, you tend to keep it. It is something like the moment we get a new calendar, we're going to get rid of this. They are very old and very inefficient. We very much like to see of these plants, but unfortunately we could not do it because this country has a big problem. Even though we operating capacity, we cannot get the plants. These plants problem in machine. It's not a problem. There is a big problem throughout the country. Getting things done. So yes, your question is right.
Yeah.
Yes, we must go for new technology. We also very much like to do that.
Thank you, Lakshita. Over to you, Tirali.
Right.
I think Mr. Raman is there. I don't know whether he wants to make any comment.
Before I go there, I want to ask 2 questions from Narendra. Narendra, there are 2 questions for you. One is on smart metering, whether it can be done. And number 2, whether there are any distribution losses and can they be reduced?
Yes, sir. Actually, our first question about the smart meters, it is happening. It is not rocket science, or it is not something innovative sort of. All over the world, smart meter deployments are taking place now. Probably 5 years back, it was kind of a cutting edge technology. But today, even in Sri Lanka, in Leko, we are having about 60,000 smart meters in operation. I think CB also got in the order of about, I don't know the numbers, but CB also in the deployment stage. So we are deploying. Actually, even today, if you request a prepaid, we are having a prepaid facility. Sorry, not prepaid, the e-billing facility. If you request e-billing today itself, any of our customers, we will come and install a smart meter free of charge. And subsequently, the billing will be on by your email. So likewise, those services are in the rollout phases. About the distribution losses, of course, distribution loss got to be reduced. That's not an option for a distributor. It's a must. LECO records at the moment about 3.5% loss. So we envisage actually our losses are in the order of about 5% until we start deploying electronic meters and smart meters. With the infusion of smart meters and electronic meters, our losses came even down beyond our anticipated. Our plans were in the order of to achieve it in the order of about 4.5. But now we are very happy to see that the losses we record in the order of about 3. So that's the answer for those 2 questions.
Right, Narendra. So we will go to Mr. Raman, who has been helping us out on the standards and establishing of standards in Sri Lanka. Any view from you, Mr. Raman, on this program and anything that you want to add here?
Thanks, Tyrell, and thanks to Professor Lakshman Watawala for inviting me to attend this very interesting webinar. The points made by Lakshita and others about various practices were very interesting, actually. And added to that was the way in which Regulatory Commission has changed the landscape of power sector in India. The views brought by my friend Mr. Mohan from the Neyveli Lignite Corporation experience was really enlightening. I just want to only quickly share in that context one episode which I have also gone through, which will reflect the way in which the Regulatory Commission can start enhancing the maturity of cost management practices in the power sector, wants to start that journey. I remember when the Central Electricity Regulatory Commission, called as CERC, mentioned by Mr. Mohan, when it came into existence, I think within 2 or 3 or maximum 3 years, they called me to study one thermal power plant near Chennai, which is a place called Vijayawada, a few hundreds of 300 kilometers from the range of Chennai. The objective was defined like this. They said you need to study the cost structure of the VTPS or the Vijayawada thermal power station. But in that study, you bring in a tool called activity-based costing. Use a tool called activity-based costing, which is popular with the CMAs. So you as a CMA apply that tool in this particular power plant and see what sorts of insights the study can give us for further use. And they define the further use as something like this: that costing study applying this tool called activity-based costing should reveal to the management of the thermal plant what sort of hidden inefficiencies are there, what sort of hidden cost buffers are there. Like, for example, I'll give you one very brief example. Let's say the coal content, the ash content in the coal is very high. So as a result of ash content in the coal, a series of costs are incurred and the overall cost structure goes up in a thermal plant. So in case the ash content goes high, so increased cost structure due to a ash content is called as a non-value adding cost in the activity-based costing mechanism. So CERC said we want a transparency on the hidden inefficiencies of the cost structure of a thermal plant, so that in future, when we fix the norms which was referred to by Mohan, either in the O&M, the maintenance norms, or in any other cost element, these inefficiencies which come from a cost management tool would be kept in mind, and we will give proper disallowance for those areas and motivate the thermal plants to improve their efficiency. So this is one example in which the Regulatory Commission goaded a thermal plant to look into the application of a cost management tool and made the thermal plant to analyze the cost structure with reference to hidden inefficiencies and connect it with the overall cost submitted by them for the regulatory authorities. So this is one classic example of how a regulatory commission can introduce mature practices in the power sector. So why I am referring to this, when you have a long-term perspective in Sri Lanka and when we evolve the cost management systems, we should not look at the immediate crisis alone. If you remember, if you recall the point made by Mr. Mohan, when CERC was brought into existence, or regulatory commissions were brought into existence, just like the British villagers started stoning an engine, rail engine, when it was first introduced, that a demon is coming into the village, and later on the steam engine became the engine of growth throughout the world in that century. Same way, the regulatory commission played a very major role of improving the business practices and cost accounting practices in India. Why I am saying this? In Sri Lanka, we should have slightly a midterm also and long-term view that how to now, having come to this situation and keeping in mind that efficiencies and efficiency-based costing and pricing should be brought into the power sector in Sri Lanka, how should we have a milestone, have a roadmap for improving the cost management practices also? So while the challenge of the immediate crisis is very important, revision of tariff is important, but an institute like the Institute of Certified Management Accountants of Sri Lanka, our institute, should be brought in into a very big way by the Public Utilities Commission as well as the Ceylon Electricity Board as to how to mature the cost and management accounting practices in Sri Lanka. This is exactly what I wanted to give my view as a comment after listening to the very excellent conversations of all the speakers. Thank you, Tyrell.
Thank you, Mr. Raman, for your very informative
Sir, shall I add one more? Shall I add one more point?
Yes, Mr. Mohan. Yeah.
It's compulsory statutory audit. I mean, cost audit is there in all power sector for the last 2 decades. So that is one of the areas that help us to point out the deficiencies. Actually, when an internal team tells something to the management, it will may not attract much attention. But an external agency is also published, which is also submitted to other government and all, that will attract the attention of the management, and they will try to fix the issues. So that can also.
Tyrell, Mohan, I'll explain to them in a slightly different way. Tyrell, what Mr. Mohan is explaining is in India, we have this concept of cost audit. So the cost records of companies like in power sector was one example is power sector. The cost structure, cost statements which are submitted to the regulatory authorities or any authority is very thoroughly verified by an external team through a concept called cost audit. So what an internal team, if at all, even if it has got firepower, it is not able to establish a fact. An external auditor, when he goes through this cost records and cost structure so thoroughly and comes up with the recommendations, it invites the attention even up to the board. It becomes a point of corporate governance, in fact. So to that extent, cost structuring and auditing of cost is receiving very good attention in India. This is what Mr. Mohan wanted to say.
Thank you, Mr. Raman. So I think those are the questions that we have. I think, Professor, that CMA has a very large role that we can play in all these institutes, even the PUSL, CEB, and having cost audits, cost standards, and analyzing costs. I think we'll go ahead with that. So those are the question and answers that we wanted to answer. I think we have mostly answered them. Other ones are very political questions that I don't want to take in this forum. So that concludes our meeting, and I'll ask Professor Wattal to do the closing remark and thank all our participants.
Thank you very much, Tyrell. I think you have done a very good moderation of our session, which has gone on very well. I must thank all our speakers because not only that they readily accepted our invitation, but today they gave a very detailed description of how the power sector and the energy sector, as was mentioned, is operating in Sri Lanka. Not only operating, the importance of it, the professional nature of how it has to be done, and the major role that it is playing in Sri Lanka. So I must thank especially all those who really contributed in these excellent presentations. We had the Ceylon Electricity Board. I must thank the General Manager because I sent a letter and he nominated Mr. Lakshita, who gave a very good description. I think that he said that the timing was short. Maybe we need to have more of these seminars and discussions and workshops, which will help us, because not only for us to get to know and understand what is happening, but also for them to understand the importance of the cost accounting practices, the importance of the cost accounting records, and as mentioned by both Mr. Raman and Mr. Mohan, how they have helped the Indian industry. So I think that was a very good explanation of the cost audit that is being used. Of course, certainly we need to train our people to do that audit, and also that it would give some excellent value addition to what is happening. Then also we had Dr. Narendra, who explained very well, because he is operating as a distributor, and then where the bulk supply is coming in. So according to what he says, that they will not lose, that they will also be always be profitable, and will be able to carry on their business. So that's very, very good, because also I know that if you are a smaller unit, will also generate more efficiencies, the productivity will be more, and also management would be very much better. So Dr. Narendra, thank you very much for your detailed description on the pricing area which you gave to us, because although we are maybe on the cost accounting, on the financial accounting, we still have to, these are special areas where we need to gain more knowledge in order that we could help these industries, but also there is a that if more cost and management accountants are also employed in this sector, they will also be able to help them in a very bigger way, and also bringing efficiency and productivity in this organization. Then also we had the regulator, because the regulator's role is a very important role that they have to play. And I think already Mr. Kanchana made a very good presentation, and he told us exactly what are the things, what are the shortcomings that are there, and how what role that they are playing. And I'm sure that we can join with them in helping the electricity industry, because a lot of these things that have been put into practice have to be implemented by cost and management accountants. In 2014, the Committee on Public Enterprises recommended, they made a recommendation in their report. They said that many of the state corporations are not having any proper costing system. They are losing heavily, and that they recommended to the Treasury that every institution should have either a separate cost and management accounting division or a cost accountant, so that their businesses would be efficiently managed. But unfortunately, the Treasury has not taken any notice of it, and unfortunately today we can see the major problem that we have because of this not maintaining proper costing, not maintaining the proper financial records, which has really brought big disaster to Sri Lanka. So we need to ensure that these are brought in, but these have to be done with the support of the agencies. Now, the regulatory commission is one agency, then of course the other, the CEB and the PU, the LECO and all, where we can join and then see how this will be done. And of course, with the cost and management accounting standards board being set up, where they can help us also to frame the cost accounting standards, so that everyone will be maintaining the cost records and also maintaining the cost account. So then of course we had Mr. Mohan, who with a lot of experience in India, where he told about the experiences that they have, how the regulator coming in has helped the industries, and now how well that they are doing and also making a lot of profit. And how the costing and the cost accounting, the financial discipline has helped in all these respects. So I think that gave us a new idea, new thinking as to what we should do from our end. And of course, we are very thankful to Mr. Raman, because he's been helping us, and he's the one who really introduced us into the managerial and societal costing, because I also mentioned at the beginning that ultimately all these costs have to be met by the society. The people have to pay for it. Then we have to ensure, because it was also mentioned, I think, by the regulator, that about the cost competitiveness, which they have to arrive at. So that's some of the important areas. And I'm once again, let me thank all our presenters and also all our participants who have been there, quite a number of them who were there, and then where we able to get this knowledge. And I think that we need to take this step further, and I'm sure that maybe we need to make certain representations on the tariffs, on the tariffs that they are going to do, called by the commission, which certainly we will do, because we have a cost and management accounting standards board, and they are now studying it, and they will be able to make certain suggestions and recommendations on the tariff proposals that are there. So once again, let me thank everyone, and also of course our moderator Mr. Tiral Roach, who's been very much involved with our costing area, and I'm sure that this has given him also a wider exposure into the electricity and power sector, which will be very beneficial in our framing of standards and taking it forward. So once again, let me thank everyone, and I do hope that we can meet again and discuss this in more detail, so that we'll be able to take the cost and management accounting profession, or bring the cost and management accounting profession closer to those industries that require it, and give them the benefit of this. So thank you, and Wish you all the very best.
Thank you very much. So that concludes the session. Thank you.